The $8.5 billion bailout. SoftBank just reported a $2.2 billion quarterly profit, but the single line item holding their balance sheet together is actually an $8.5 billion paper mirage. In August 2025, SoftBank quietly bought a $2 billion stake in Intel at $23 a share. Because Intel stock has surged nearly 400% in 2026, SoftBank was able to book a 1.33 trillion yen mark-to-market windfall today. The headlines are spinning this as a massive win for Masayoshi Son's investment strategy. But if you strip away that one lucky equity swing, the reality of their core operating units is incredibly ugly. The Vision Fund collapse. Strip out the Intel windfall, and SoftBank's quarter is a financial disaster. The flagship Vision Fund's profit effectively evaporated, plummeting 98% year over year. Meanwhile, their AI computing unit, holding ARM and GraphCore, widened its operating loss to over 200 billion yen. SoftBank is bleeding cash on its actual operations, exposing a critical structural weakness as they face a $40 billion debt trap. The bridge loan clock. SoftBank has aggressively committed to funding OpenAI, pouring in $10 billion in April, another $10 billion in July, and targeting a cumulative $64 billion stake by October 2026. But with OpenAI's highly anticipated IPO delayed, SoftBank has no liquidity event to cash out. To finance this massive cash burn, Son secured a $40 billion bridge loan that expires in March 2027. An $8.5 billion paper gain on Intel shares looks great on an earnings release. But mark-to-market accounting does not pay back debt. Unless SoftBank liquidates that Intel position, they are trapped. Which exposes the real implication of SoftBank's current financial identity. The real implication: SoftBank is no longer a strategic tech operator. They are a highly leveraged hedge fund using mark-to-market equity swings in a legacy chipmaker to paper over a massive liquidity trap with OpenAI. This quarter proves the fragility of the entire artificial intelligence capital cycle. When a $2 billion strategic placement in Intel from last year has to do the heavy lifting for the world's most aggressive tech investor, the core thesis is bleeding. For industry operators and investors, the takeaway is stark. Son is trapped holding illiquid startup assets while borrowing billions against a ticking clock. If Intel stock corrects before SoftBank can exit, or if the bridge loan comes due without an OpenAI public offering to unlock capital, the math simply collapses. The exact indicator to watch is that March 2027 debt expiration date. That is the moment when paper gains must become cold, hard cash. Subscribe for more